Mexico is moving to raise tariffs on imports from China, a decision that follows months of pressure from U.S. President Donald Trump, and comes at a time when Mexico is also trying to protect its struggling domestic industries from what it views as subsidized Chinese competition. According to people familiar with the matter, the new tariffs will be rolled into Mexico's 2026 budget proposal, which President Claudia Sheinbaum's administration is set to send to Congress by September 8th. The planned hikes will likely target cars, textiles, plastics, and a range of other Chinese imports, though the specific rates are still being finalized and could change. While details remain under discussion, passage of the proposal appears almost certain, given that Sheinbaum's ruling coalition holds two-thirds majorities in both houses of Congress, leaving little room for significant changes by lawmakers. The move follows consistent lobbying from the Trump administration, which since early this year has urged Mexico to adopt duties similar to those imposed by Washington. Trump's broader vision, described by Mexican officials as a Fortress North America, aims to limit the inflow of cheap Chinese products into the continent while deepening trade ties between the U.S., Mexico, and Canada. Mexico's decision also comes as Chinese exports to Latin America have surged this year, offsetting losses in the U.S. market, and as Mexico itself has emerged as the top global destination for Chinese cars, overtaking Russia in 2025. While tariffs on Chinese vehicles in Mexico currently run as high as 20%, that remains far lower than the 100% duties imposed by Washington under former President Joe Biden. The tariff move is also tied to security and diplomatic negotiations with Washington. Trump has linked fentanyl trafficking to a 25% levy on Mexican exports not covered by the Free Trade Pact, and progress on a joint anti-drug strategy could pave the way for compromises on steel, tomatoes, and other trade disputes. China said that it opposed imposing restrictions on China under the coercion of others on Thursday, August 28th, a day after Bloomberg News reported that Mexico's government would raise tariffs on Chinese imports, including cars, textiles, and plastics, as part of its 2026 budget proposal next month.
Mexico is China's second-largest trading partner in Latin America, and China is Mexico's third-largest export destination. Mutually beneficial and win-win cooperation is the essential feature of China-Mexico economic and trade relations. China has always advocated for inclusive economic globalization that benefits all, and opposes all forms of unilateralism, protectionism, as well as discriminatory and exclusive measures. China firmly opposes restrictions on China under various pretexts imposed under coercion of others, which undermine China's legitimate rights and interests. We believe that the countries concerned will remain independent and properly handle the relevant issues.
As Mexico raises tariffs on Chinese imports, it sends a clear signal of alignment with Washington's trade war strategy, even as it tries to balance its own economic vulnerabilities. The coming weeks will determine how far this shift reshapes not just Mexico's ties with China, but the entire structure of North American trade. We'll continue to track the impact of Mexico's tariff hikes, the U.S. pressure behind them, and what it all means for global markets. Stay with the Indian Express, and don't forget to subscribe for more verified international news and in-depth analysis.